Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I will be speaking about USDCHF because at the moment we do have quite interesting price action and structure. So starting here from the monthly time frame, what we can see is that the market has been creating a series of higher lows. Now, in creating these higher lows, what we expected was for the market to finally break out from the pattern with a strong move to the upside, which is in fact exactly what the market created here. And by the way, I did make a full breakdown of this pair when the market was here, explaining all the reasons for which in a situation like this we expected this move to the upside. And I will link in the description this previous analysis so you can go and check it out for more free education. Now, at the moment, if we look left, what we can notice is that we are testing a very strong supply. In fact, from here, the market created this wicks and rejected the zone to the downside, meaning that here we actually have a very strong supply and resistance that since the market at the moment is testing, we could expect the market to reject to the downside. Dropping down on the weekly, what do we see? Now here on the weekly, we see a market which is definitely overextended to the upside and in need of a correction. Now, in general, when you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have the 0.32 lining up in this area. And usually, you want to see the market create a correction at least to the 0.32 when you have an impulse like this. So we have a first downside target at this level. Going down on the daily, what do we see? Now here on the daily time frame, we actually see a completely different scenario with the market creating this very strong impulse. And once again, as we already said, after the creation of an impulse, we want to see a correction. But here we have a different impulse. In fact, we must measure it from this low to this high. And if we do that, we can see how the 0.32 is at the moment lining up in this area, which will be our downside target from a daily perspective. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CHF, we can see how lately net positions have been obviously decreasing. We went from minus 5k to minus 12k, and that obviously has fueled this USD CHF bull run because we had the weakening of the CHF fueled by this decrease of the net positioning, meaning increase of shorts from an institutional perspective. However, we can notice how it's already 2 reports in a row that we see thousands of longs getting added. Now, this usually indicates that we could see short-term strength of the CHF, which would at that point trigger a correction after this impulse, which is exactly what we wanted to see when we analyzed this pair from a technical perspective a few minutes ago. So there is definitely the possibility for this move to the downside and completion at this 0.32. So how we could be approaching this potential move to the downside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market market as we have right now to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market, at that point, we could be looking for this potential move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. Now, if you do know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.